And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here alongside Katie Greifeld, taking you through to that closing bell with the global simulcast. Carol Massar, Tim Stenovec, they join us now as we welcome our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube to parse the most crucial moments here in the trading day. Carol Massar, Tim Stenovec, great to see you once again here on this Tuesday afternoon.
Did you bring us back any Olympic chocolate or anything like that?
Olympic chocolate? I don't think that's a thing. They passed out some other things at the Olympics.
I believe
you did bring back
those.
How about a medal,
goodies.
Romaine?
Nothing coming this way at the newsroom. I'm just saying.
I walked by your desk earlier today, Carol, and you weren't there. I just assumed you had the day off.
No, I've been working. Anyway, good to have you back. Even split in the S&P 500. I feel like this is a market looking for direction, whether we get it from earnings as Walmart reports and retailers. We also get Fed minutes tomorrow. And then, of course, you have an inflation print later on this week, an important one. So maybe we're just looking for something to help us figure out what happens from here.
Well, in the early part of the day, it was looking like it was going to be tech under pressure, with the S&P down as much as 0.9%, and a lot of those mega cap tech companies falling. But like Carol said, the S&P 500 searching for direction a lot of the day. By my count, more than a dozen times, Katie, moving between gains and losses today.
Wow, so you really had your microscope out, taking a look at that S&P 500. I will say the NASDAQ 100,
like that.
It looks like it will
Real
finish.
shoe leather reporting there.
Always do,
Finish
guys.
in the red.
That's how I roll.
But these are small moves overall. It really feels like this was sort of a wait-and-see sort of day.
Well, after coming off one of the worst weeks in quite a few months here, you saw the dip buyers did come back in here on this Tuesday afternoon, but the net effect of it all is really a market that is going to end the day effectively going nowhere. It takes a while for these numbers to settle. The Dow is going to finish in the green, but only up about 0.1%. The S&P is going to finish in the green, but only up about 0.1%. The NASDAQ composite is going to finish in the green, but only up about 0.1%. We should point out the NASDAQ 100 is going to close out the day down 0.1%. And you take a look at the Russell 2000, we'll just call it a wash here, down about 1 point. So basically unchanged on the day.
It's a 0.1% kind of day in a big way. As I mentioned earlier, though, if you dig inside something like the S&P 500, more of an even split. So there were some stocks that actually moved big time to the upside and big time to the downside. 241 names, though, overall, Katie, gaining ground in the S&P 500 on this Tuesday. 261 lower on the day, one unchanged.
Absolutely. Things got a little bit more interesting. When you take a look at the sector level here, you can see the circle is really a mix of colors, basically two, but there's a lot of them. Anyway, real estate was your biggest gainer on the day. That sector gaining by 1%. Financials also having a pretty good start to this short week. Tech higher by about 0.5%. Meanwhile, in terms of what didn't perform, consumer staples, your biggest loser on the day, down 1.5%. Energy, Carol, also down as a sector by about 1.4%.
All right, guys, let's get to some earnings crossing the Bloomberg terminal. We have Caesars Entertainment crossing as we speak, bringing up the numbers. Just a few headlines here. Let's look at fourth quarter loss of $1.23 a share. Fourth quarter store net revenue, $2.92 billion. That compares a little bit above the estimate on the street of $2.89 billion. Right now, you're seeing the stock little changed here in the aftermarket. So maybe looking for a few other headlines when it comes to their business and getting an idea on the world of gambling. So we'll keep an eye on that. In the meantime, I'm going to go to some of the individual gainers. Number one gainer in the S&P 500, in fact, up about 12% in today's session. We're talking about Norwegian Cruise. This one, after activist investor Elliott Investment Management said it built a more than 10% stake in Norwegian, also sent a letter and presentation to the company's board urging changes to unlock what it believes is more than 150% upside for shareholders. So, again, about 12% upside in today's session alone. Let's go to another one, Masimo. This one up 34%. No surprise. It was a target bought out by Danaher, agreeing to buy the medical equipment firm for $180 a share. That's a 40% premium over Friday's close, a total enterprise value of about $9.9 billion, allowing Danaher to gain a foothold in the medical supply business. So some M&A Tuesday action happening. And then TripAdvisor, let's go on over to there. up about 9% in today's session. This is after Starboard Value delivered a letter to TripAdvisor's leadership highlighting prolonged underperformance and announced plans to nominate a majority slate of director candidates for the 2026 annual meeting. Keep in mind, TripAdvisor's down almost 30% year to date. We got some more earnings. Romaine, take it away.
Yeah, Cadence Design, of course, makes software to design chips, out with its report right now. 4Q adjusted EPS, a beat at $1.99 a share. The street looking for $1.91. Revenue beating slightly at about $1.44 billion. Here's your guidance for the full year 2026. The company says expect revenue in a range of $5.9 to $6 billion. The low end of that range, right around the average of street estimates. As for EPS for the full year, $8.05 to $8.15 a share. That's the guidance. The low end of the range, basically right around the average of street estimates. A slight pop in the shares, now on change actually, but they were up about 7% here in the after-hours trade.
All right, you are looking at some earnings. We're still waiting for a few more companies to report, and then, of course, the big one coming next week. I do want to take a look at some of the stocks that were on the decline today. I want to start with the worst performer in the S&P 500. This is the owner of Napa Auto Parts, Genuine Parts Company, GPC. Shares fell today by more than 14.5%. This after the company announced fourth quarter earnings that fell short. Net sales also came in below expectations. The company, though, is going to split into two public companies following a review of options for its automotive and industrial business lines. The split comes during a volatile stretch for the automotive business. It's grappling with higher prices, higher costs, economic uncertainty, and affordability challenges for consumers.
Do you know how to change your oil, Tim?
Sorry?
Do you know how to change the oil in your car?
I know how to take it somewhere to be changed. Romaine, here's the deal. Here's a real thing. Nobody changes their oil anymore because what do you do with the oil? That's the old oil.
You pour it down the sink.
No.
Yeah, sorry, Mr. Environmental.
I
don't want to burst your bubble, but
that's what people used to do.
Yeah.
And it wasn't good.
Okay.
But that's the real reason why it's so hard to change your oil.
Well, what do you do with the oil, Tim?
Yeah.
You're supposed to take it somewhere to recycle it, and by the time you do that, you might as well just take your car somewhere to have the oil changed for you.
Like the sewer, you know?
Oh, okay. You guys are killing me. Katie, you're watching Palo Alto
Yeah,
Networks.
we do
What's
have
going
some
on?
earnings. Back to business here. These results coming out. They see full-year adjusted EPS $3.65 to $3.70. The estimate had been for $3.87. So that range, of course, falling below the estimates here. The full-year revenue seen between $11.28 billion to $11.31 billion. They had seen $10.5 billion to $10.54 billion, so a bit higher there. You can see the shares right now trying to decide what to do, but the initial read is higher here. They also see next generation security ARR for the full year between $8.52 to $8.62 billion here, again, for Palo Alto Networks.
Okay, we still got some more names that are expected to report today, including Toll Brothers. We'll bring those numbers to you as we do get them. In the meantime, a couple more decliners here. Also a worse performer in the S&P 500 today was General Mills. The company lowered its fiscal 2026 outlook, citing a more challenging consumer environment. The company said weak consumer sentiment, heightened uncertainty, and significant volatility have weighed on category growth and affected consumer purchase platforms. This is the parent company of cereals such as Cheerios, down 7% on the day today. And finally, Danaher. Carol had the news with this company agreeing to buy Masimo Corp in a deal with an enterprise value of about $9.9 billion. Masimo shares moved higher. Danaher fell today by just about 2.9%, Romaine.
All right, let's get a quick check here on yields here. A mixed day here. You saw on the shorter end of the curve a slight uptick in yields, about 3 basis points for your 2-year yield. On the longer end of the curve, we don't have it on the screen. We should start putting it there, though. The 30-year yield did actually decline, but only by less than 1 basis point here. So something to keep an eye on, particularly as we head deeper into the month of February and into March and the next big Fed meeting.
All right, guys, just watching those earnings. Cadence now up about 1.6%. You got Palo Alto down about 2%, and Caesar now up about almost 3%. Caesar's Entertainment, so some movement, and we'll continue to track some more earnings after the close. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Katie and Romaine continuing there, of course, on the close on TV, and Tim and I continuing on Bloomberg Business Week Daily.
Is that what they say? Is that what you learned?
Yeah, I've been speaking Italian.
Oh, wow, I'm very impressed.
Driving everyone nuts.
Still waiting for those.
Impossible to understand.
Still waiting for those Olympic chocolates. Just saying. We'll
There's
see you
some.
again.
They're by my desk. You can come and get it.
We'll see you again. Same time, same place tomorrow.